Hey everybody, welcome back to Grain Markets and Other Stuff. Thank you for joining me. We have a very special guest on the program here today, Dr. Richard Sandor. Doc, welcome.
Thank you, Joe. Great to be here with you.
Doc, you are a man of many accolades. You have a laundry list of accomplishments here that I could run through, and let's go through a few of them and do a quick introduction. As I told you before we started talking here, my audience consists of farmers, people involved in agriculture, and we're going to hit on some really important topics in regard to that stuff. But let's start off with what you're doing right now. You are the chairman and CEO of the American Financial Exchange. What exactly do you do there?
The American Financial Exchange is a transparent, rules based, regulated electronic market for overnight and term lending among banks and other financial institutions. The exchange was set up or conceived of in 2011, opened for business in 2015, and the purpose was to provide a liquidity function, number one, and number two, to really find a substitute for LIBOR. We took a radical position in 2012 and wrote an article that LIBOR was hurting the name derivatives and it would eventually disappear. And so we have a new benchmark, which I think your audience might be very interested in.
And that benchmark is called the Ameribor Index, correct?
Yes, as opposed to LIBOR, it's Ameribor. Well, why Ameribor? Joe, I come out of the heartland here, and it struck me as peculiar that London had LIBOR, Europe had Euribor, Tokyo had TIBOR. How could it be that there was no American benchmark? And so we set out not to have a London-based or a multinational. We set out to engage America's community banks, rural banks, small banks, medium-sized and regional banks to develop an American index that reflected supply and demand in America for capital and wasn't set and literally set or fixed in London. It was competitively determined just the way corn prices are in a multi-auction market.
Now, that leads me to another accomplishment. This is, and I'm not just saying this, guys, this is straight off the Wikipedia page. Doc is considered to be the founder of financial futures. If I understand correctly, in the 1970s, you were the vice president of the Board of Trade. You were instrumental in developing the financial futures products at the Board of Trade. That's all correct?
Yeah, that is, Joe. I'm 700 years old.
You look good for 700, Doc.
And I'm from the Jurassic era, and I was chief economist for the Chicago Board of Trade in 72 to 75. And in 73, the first Arab oil embargo hit, and beans hit $10 for the first time, and corn $5. And I had to testify in Washington that this was a supply and demand situation, Joe, that it wasn't speculators driving up food prices. And I went to Congress and to various senators and House people and said, look, guys, this is what happened. There was a late spring. The crops didn't get in. There was a very hot summer and corn tasseling wasn't going on. There was an early fall. The Russian crop failed. The Chinese crop failed. The anchovies stopped running off Peru. And as a matter of fact, most of the ag community was long because of export orders by Cargill and Bunge and ADM, and so it certainly wasn't the speculators. I thought I did okay. I called my boss up, Henry Hall Wilson, and he said, how'd you do? with them in Washington. I said, "Oh, I killed it, Henry." I told them about anchovies. I told them about. Next day, an article appears: speculators in Chicago drive up food
Of
prices.
course, of course.
I couldn't.
Understood.
I could have been more wrong, but I came into Henry and I said, "Henry, I've got this idea for financial futures. We're going to get regulated." And there's going to be a new federal agency, and we need to change the definition of what a commodity is. And we have to say it's tangible or intangible. And by doing that and ensuring that the new agency had exclusive jurisdiction, that provided for the birth of financial futures, that enabling legislation. And worked on that for a year, and then on October 20th, 1975, the first commodity introduced by the Commodity Futures Trading was actually not a commodity, but a fixed income instrument. So that's the irony of the birth of financial futures.
And that in itself is an incredible accomplishment. I'd like to talk about one more of your accomplishments before I start asking you real questions here. You are also considered to be, and the farmers who are listening and people in agriculture are going to be very interested in this, and we're going to talk about it later. You are considered to be the father of carbon trading. You started the Chicago Climate Exchange, and from what I've read about you, you have really kind of turned your focus on where finance meets the environment at this point in time. Am I correct in saying that?
Yes, you are.
And what exactly do they trade on the Chicago Climate Exchange, and what's been the trend here the last several years?
Basically, this goes back to the roots that I had in Chicago. I worked on the corn contract and the bean contract. And actually, when I came to Chicago, Joe, there was a big argument, and your audience will get this, for multiple delivery points. And so I went to a meeting in Des Moines with a group of Iowa farmers and tried to present the case that we should have multiple delivery points, but only as a safety valve, that the contract would fail if you had them all over the country. And one of the farmers said to me, "Well, what do you know about farming? Have you ever farmed?" And I said, "No, I haven't." I said, "But I'll tell you what." His name was Max Naylor, and he was a hell of a guy. I said, "I'll tell you what, Max, why don't I come out on your farm? I'll be a hired hand and help you plant the crop, and then I'll come back in the fall and I'll harvest it with you." He said it was a deal. So I really cherished that experience. You could see the rows that I planted. They looked like an S. His were perfectly straight. And I looked like I had been drinking a little too much in the morning, if you took a look at what I planted. I fell in love with the agricultural community. And when I got the idea that we could use markets to mitigate global climate change, I thought the solution really lies in the American agricultural segment. And the idea was not to punish polluters, it was to incentivize people not to pollute and use the farmer, the 300 million acres plus that we have in America, towards negative emissions. So, and by negative emissions, I mean anything which traps carbon. So we work with the National Farmers Union, ag co-ops all over the country to develop low-till and no-till protocols. And if farmers adopted them, they could sell their carbon credits to companies like Ford and Honeywell that were also part of it. We developed protocols for ag methane capture. We had Minnesota farmers that that let the methane be trapped under a canvas and then burned to fuel the milking machines. We had forestry protocols for reforestation and tree planting, all of which were credits. So we thought that the answer was to create carbon credits, incentivize farmers. And as a matter of fact, those of your audience that are old enough, one of our farmer members was Dick Lugar, who is then part of the Senate Ag Committee, and he owned a farm in Indiana. And Senator Lugar joined and actually replanted walnut trees. And he used to come up off the floor of the exchange, Joe, and check the price of corn and check the price of carbon.
Why don't we start off my questions here? Well, let's start off with the carbon stuff. I was going to do that last, but this is a good segue. So I was at I spoke at a meeting called the Top Producer Summit here in Nashville over the winter, and they did a whole presentation on carbon credits and the prospect for every farmer in the country essentially being able to sell carbon credits if of course they sold grains that were turned into biofuels, if they used things like no-till in regard to farming practices, if they enrolled additional acres into CRP. Do you envision here a scenario where over the next, say, 5 to 10 years, every farmer in the country is involved in selling carbon credits in some way, shape, or form? Is that something you believe we're headed toward?
I believe it will happen if and only if the listeners here educate the senators to look at the previous bills, to look at Peterson the last time, who was head of the House Ag Committee, who had that vision. But it's a political issue, and more importantly than ever, farmers have to weigh in so that they can make a contribution and also make money so they can stay in business. The goal is to reduce global warming. It's not to punish polluters. And the people who can contribute to that goal and earn a profit for it are farmers. The farmers have the ability to have two crops, one above the ground, which is called food or feed grains, and one below the ground, which is called carbon. Its food can be used in bio fuels and the roots that contain the carbon. And we had Monsanto on. There's an enormous ability to have expanded roots with the genetic modification. All of these things are an enormous opportunity, but the farmers in America's the heartland and all over the country have to be involved and understand they win. And they have to make sure that the legislation is influenced by not only small northeastern states, but they speak out in the Dakotas and Wisconsin and Minnesota and Missouri and Alabama and Kansas and Colorado and all across the country, that they have to speak out not only for agriculture, but for sustainability, and that America's farmers have an incredible role. And what we're doing now is the same message. It's try to empower, the ag sector in every way possible. Its own interest rate benchmark, carbon, what resources can we have? It is very important that we focus on that, and you reach out to your farm groups and your senators.
That's great advice, and it sounds like that this could end up, if it goes in the right direction, could be a really great thing for agriculture in general. If there's another profit center available for the United States farmer, that may help a guy through some of these leaner times, like we've seen the last several years up until 2020.
And we have to educate our people in the not-for-profit area to recognize that
Hmm.
farming is part of the solution. It is not the problem. People sit in K Street and the lobbyist firms and the not-for-profits, and they don't really understand what U.S. agriculture is capable of.
Yeah. Understood. That's a really great point that you made there, Doc. I want to get to interest rates, and as I told you off the air here, farmers typically borrow a lot of money. You've got basically three places where farmers are going to borrow money. The first one's going to be their operating line, which is an annual deal, and rates right now for operating are like anywhere from 3 to 6% ballpark, depending on who you are, your credit situation, all that. Land is a big deal, and farmers, a lot of them have notes on land. Long term money in that neighborhood running 3 to 4%, and then you've got machinery costs. Farmers borrow money to buy machinery in a lot of cases. Those rates are running 2 to 3%. So we're still talking very low interest rates overall. What's your general take on the interest rate environment right now?
I think it's pretty benign.
Mm-hmm.
And I believe that given that we're still not out of the pandemic, Joe, that we will have a very accommodated central bank
Mm-hmm.
for the next 12, 18 months. But we have to be careful because the big amount of liquidity that is being pumped into the system is laying the groundwork for some potentially large inflation.
Okay, so that was on my list here, and I didn't know if you would call it inflation or not, but what I see here very plainly is that asset values are increasing rapidly. Everything from commodities to equities, real estate. Case Shiller says real estate residential is up 11% year over year, yet the government uses this CPI number, which is 2%. I mean, do you think, are we seeing inflation already? Is this just, I mean, what is actually going on here? What would you call it?
Well, we're seeing asset inflation, Joe. And in the way that you just said, equity prices, land, single family, residential, etc. But it is a lot of liquidity with no place to go.
Mm-hmm.
That that coupled with increases in productivity that I see emerging from the pandemic, like
Yeah.
Zoom calls, your business, lack of travel, reduced commercial demand for commercial real estate in city centers, we're seeing a restructuring. The danger lies in not these asset inflations, but we start getting cost push inflation in excess of the productivity gains.
Mm-hmm.
And if you keep on pumping liquidity into the system, the question is not if, it is only a question of when. And that's very dangerous. The Fed is keeping an eye on it. It says it is monitoring it, but I lived through the 70s and what happened to America's farmers when inflation got a hold and in the 80s, and it wasn't a pretty picture. And right now you have to be cautious, and the Fed tells us they're being cautious, but you can't be relaxed that the liquidity being pumped into the system has the possibility of igniting a case of inflation.
Okay, so when you say liquidity being pumped into the system, we're talking essentially about this $5 trillion worth of stimulus that we've seen since last March, right?
Both at the fiscal level and also the fact that the Fed is buying long-term securities, excuse me, quantitative easing, all of that where the whole curve, not only the short, but the intermediate and long term, with the Fed buying government bonds and mortgages, et cetera, putting liquidity into the system, as well as the fiscal stimulus. So we have fiscal stimulus and monetary stimulus. If, in fact, this results in some inflation because there isn't enough productivity gains and or there are bottlenecks, what we see happening in assets could happen at the general level. I, like you, look, I'm a trained economist, and I look at all of these numbers, and all I know is that very often inflation statistics don't seem to, in my case, match the expenditure growth that I see. They tell you exempt food and then exempt this and include this and don't include that. Before you know it, the economy's got 2% built in. It doesn't look like it because I'm not sure the measures of inflation are correct. I think we share that, Joe.
Well, a lot of people think that the CPI number is not necessarily the best indicator. Let me ask you this question. Did the Fed and Congress, very simply, did they overdo it?
There's a danger of it. We won't know, but I do think that we pumped too much money into the system.
Mm-hmm.
And I think that the people who are running the central bank say they overdid it. They will say they overdid it because the Senate and the House couldn't agree on fiscal stimulus.
Mm-hmm.
So the only tool that they had was monetary. We've got to get a government that really has got or has an ability to bridge gaps and to pass legislation and operate in a bipartisan way.
What is the route that you see out of this? I mean, the Fed has built up this incredible balance sheet of assets. How do they dig themselves out of that hole? We just need to see incredible productivity. We need to see an incredible economic rebound.
Yep, exactly.
That's the way it happens.
That's the way it happens.
And that's something that you foresee. I mean, that's what we talked about. You said you think this recovery is going to be the real deal, like big time, bigger than people think.
Yeah, I am a a believer that it's dangerous to ever go short America's ability to innovate and grow.
Mm-hmm.
It's a bad trade, Joe.
I tend to agree.
So don't go short, that. And I think we are on the verge of a great growth spurt.
Mm-hmm. So it would be safe to say, though, that this stimulus, this pumping of liquidity, it makes you slightly nervous. Slightly.
Yes, it does.
It makes me nervous. I think there are a lot of people that it makes a lot of people nervous. I think there are a lot of people who think that the Fed and Congress have acted irresponsibly here, and that's not any knock on either political party, but just in general. But it seems like the minority view right now is that they're acting responsibly and that this is all going to resolve itself. Would you say that that's right?
I share the nervousness. I think your audience is a group I've always put on a pedestal because they're scared. They live with uncertainty. Absolutely. Their very lives are uncertain. The weather is uncertain. The crop yields are uncertain. The foreign demand for their products is uncertain, and they behave accordingly. And, I believe that that's the appropriate way for people to run their own finances. And I think it's the appropriate way for people in elected positions and appointed positions to have the same fear that exists. You cannot go along and assume everything will right itself. The
Mm-hmm.
caution should be there, particularly given what has gone on. And I think that we can't be too cautious as Americans with regard to being prudent over the long term. So yes, we stimulate to get the economy back on track, but you can't get a type of euphoria like there's some people that believe should exist. We know what happened at the end of the Roaring Twenties.
Mm-hmm.
We know what happened at the end of the 90s with the dot-com bubble. I have grown up, and every decade, people tell me, oh, this is just a once in 100-year event. So, the inflation in the 70s, and oil prices going up, that was once in 100 years, Richard. Don't believe that. Oh, the 87 crash in the stock market, losing 25% when, that's just once in a lifetime. Oh, the dot-com bubble bursting, the Asian crisis in the 90s. Oh, that's just one in 100 years. Oh, the 2007-8 depression. Oh, that's just one in 100 years. Oh, this COVID-19, that's one in 100 years. So for the last 6 decades, every decade, whether I like it or not, there's a one in 100-year event. So I don't understand that arithmetic, Joe.
Doc, I'll put you on the spot here. What's a market right now that looks a little bubbly to you?
Well, I'm generally cautious. So while I'm bullish in the stock market, it could correct significantly,
Mm-hmm.
given the price earnings ratios and things like that. I think the bond market, these very low yields that we're experiencing, 30-year paper, 40-year paper municipalities that have very low yields. I would be cautious of all of them. I think that I don't fight a trend,
Yeah.
which I'm sure you agree, Joe.
Mm-hmm.
You don't fight a trend, but these trends and momentums end, and when they end, it's not pretty. So I'd say measured caution, and there's something which your audience has got to use as a discipline, and that's the FOMO, fear of missing out. It looks, oh, how couldn't I have done this, or wasn't it obvious? And then all of a sudden, you jump in at the wrong moment.
On the flip side, on the flip side of that question, Doc, is this is a tough one for me. Where is a good place to put your money now? What is an asset that is undervalued? Is there an asset that's undervalued out there? Because it seems like everything is so, I don't know if inflated is the word, but it seems like everything is so lofty.
I happen to think it's the only thing we know, and it's a good segue to talk about maybe benchmarks. There's only one thing that economists don't agree on anything, Joe.
Mm-hmm.
Right? But there's one thing that they do agree on, and that's diversification.
Mm-hmm.
Right? That everybody, they won't agree on anything, interest rates, equity prices, fiscal stimulus, monetary policy, international trade, tariffs, any other, issues. They're always on different sides of the fence. But everybody unambiguously believes in choice and diversity. So I think if you're sitting out there, and you should own some ag land or a proxy for it. You should own some equities. You should have some fixed income. Maybe you should have some bullion. Maybe you should have a little Bitcoin. that a diversified portfolio of every asset out there, including cryptocurrencies to precious metals to ag land to commercial real estate to any of those. I want to hold a proxy for every asset class that is around, and I think that's the prudent thing to do today.
Doc, that's really great stuff. I don't have any additional questions for you. I'm really honored to even have you on the show and really appreciate it. Is there any final thoughts here for my audience, which of course, again, farmers, people in ag, anything you'd like to leave them with?
Yeah, very importantly, we're entering the most significant event perhaps in 500 years of financial history, and that is the changing of a benchmark and the failure of a benchmark that included $500 trillion. Mm-hmm. On March 5th this year, the Financial Authority announced that there will be an end to LIBOR on December 31st, 2021. Your listeners have to ask your banks about choice and in an alternative. There is a risk-free rate. It's called SOFR. You have to ask your bankers, hey, is Ameribor part of my choice? Ameribor happens to be the least volatile. I want to shamelessly pitch it to your
You should. Absolutely.
To your listeners, ask for choice, ladies and gentlemen. Ask for what's going to replace LIBOR. Have them educate you, show you volatility charts of the existing place, because this is a huge change, and it would be a terrible thing to be reading a year and a half ago from now that the bankers in America gave no choice to farmers about an interest rate market, and then all of a sudden they are tied to their land, tied to their working capital, tied to a benchmark that doesn't reflect the real cost of borrowing and has been manipulated.
That's excellent stuff, and that's not anything that I've heard anybody in ag talk about to this point. So this hopefully should be an eye opener to some of my listeners out there.
Joe, it's a pleasure. I want to thank Straits, and who I know you do business with, and you for your support of AFX. I want to say that whatever small success I have had in the last 50 years, it started with America's farmers. I'll never forget it. My wife thanks you. My kids thank you. My grandkids thank you. So a big thank you to America's agricultural sector, the best and most productive in the world.
That's a perfect way to end it. Thank you very much, Doc. That's Dr. Richard Sandor. Thanks for joining me. Thanks for tuning in, guys. We'll catch you next time.
Thanks, Joe.